Welcome guys, welcome back. So I already explained about the last video, we are going to see about straight line method and return down method, correct? These two important depreciation method, because as per my working experience, we are using these two important methods. We are using two methods, okay? If you are going any interview also, they are asking about what is the straight line method or return down method. I'm sure about that. So now we are going to see about what is the how we are going to calculate about these two methods, and you can understand very easily if we are going for the sum. Okay, see, you can see fixed assets purchase 100,000 at 10% of depreciation. So you can see this two side. I can easily, you have to understand, that's why I make it for the in this slide like a two side. One side for the right side for return down and the left side for straight line method. Okay, that red color is return down and yellow color is straight line method. First year, how we are going to calculate? The first year all method is same, it's nothing going to change. Second year only it will be going to you have to understand about which method we are going to use. That is for the second year. Okay, this is very important for that. Okay, you can see the straight line method. The first year 100,000 we purchase the fixed assets. Okay, for example machinery whatever 100,000. So 100,000 into 10 percentage, it will come 10,000. It's very easy, correct? Because there is an I didn't put any example of partial month, we purchase 6 months before, like July or August, September. So we have to calculate. That previous video I already explained about those steps, how we are going to calculate, correct? This is the state. I am not complicate anything. Just I am going to explain what is the straight line and return down only. So you can see this 100,000 we purchase the fixed asset. So you can see 100,000 anything, okay, machinery or vehicle or whatever, 100,000 into what is the percentage? They said 10%. So it will come 10,000 per first year. And the same thing, return down method also the same thing. Return down value also same thing. Same 100,000 we are going to calculate for the 10%, it will come 10,000. So 90,000 first year is not going to change both method, correct? So what is the difference between two method? I explained, correct? The second year we want to know, we have to calculate 100,000 or 90,000. That means if you are going to calculate 100,000, that is the original cost of the asset. That is the original cost of the asset. If you are going to calculate the 100,000, that is called straight line method. If you are going to calculate return down value is different, guys, and return down method is different. Okay, whatever straight line also you are going to do, whatever amount is coming after the depreciation, it is the return down value. Okay, so based on the return down value we are going to calculate, that is called return down method. You understand? The same 1 lakh we are going to calculate, that is called straight line method. That is the original cost of the material, original cost of the machinery, original cost of the assets. If we are going to calculate 90,000, we are going to take 90,000 into 10% like that. That is called return down value. Okay, we can see the next year how we are going to calculate. See this. If you calculate original assets amount 1 lakh, that is straight line method. If we calculate return down value amount, that is called return down method. You understand clearly, correct? This is no complicate. It's very easy, very straightforward, I am telling. It's very easy, the simple thing. Okay, straight line method, the second year we are going to calculate. How we are going to calculate straight line method? You can tell me how we are going to calculate straight line method? See, our last year whatever the amount will come, 90,000, correct? After the deducting the depreciation, we can put it in the 90,000. So you have to calculate depreciation amount, original cost of machinery amount, original cost of asset amount. 1 lakh into 10% equal to 10,000. You have to minus this 80,000. Anyway, the third year it is going for the 80,000. The same 10,000 only it will come. So balance it will come 70,000. You can see the third year. But written down method, you can see the right side. We are going to take last year amount 90,000, correct? The same thing. But you can see, you can compare both written straight line and written down method. You can compare. Straight line they are calculating, they took it the original value 1 lakh, but written down they took it written value. That last year how much it is coming for the machinery amount after the deducting the depreciation. So 90,000, correct? So 90,000 into 10%, 9,000. Here 1 lakh is the original amount we took it. It's very easy for the straight line method. Okay, even though this written down also is very easy, but you don't make the confusion. That is the main thing. So you can see the second year. So 90,000 minus 10,000, it is coming 80,000. In written down method, 90,000 minus 9,000, because 9,000 how it is come? 90,000 into 10% equal to 9,000. So 81,000. Okay. So next year what is going to happen? The third year, straight line method, we are going to take 80,000. Written down method, we are going to take 81,000. Okay, we can see for the third year. See here, the straight line method, third year how much it will come? 80,000. Okay, then we have to calculate original cost of machinery, original cost of assets, whatever original cost what we purchased into 10%, it will come 70,000. Okay, so this return value, written down method, how much it is coming? 81,000 second year. So we have to calculate 81,000 into 10%, now 8,100. So I have to minus 81,000 minus 8,100, 72,900. Okay, you got it correct. Written down is we are going to take from the written down value. Straight line we are going to take original cost only. This is the depreciation, like straight line and written value, written down method comparison, guys. I hope you people are understanding about the depreciation. I think so. I feel very happy also about I teach about the depreciation. Thank you guys, thank you so much. Okay, I'm going to upload for the future any other videos also. Okay, thank you guys, thank you so much.